No tax returns required from 50,000 to 150,000. For today's video, we have an absolute game changer. I'm gonna be sharing with you how you can get a business line of credit with a high limit and no financial documents. So no tax returns or profit and loss statements. The business line of credit I'm gonna share with you today, you just need a 680 credit score. This is gonna be available to anyone nationwide. Some of y'all might be familiar with Smart Biz. Smart Biz is now a bank. Smart Biz was a marketplace focused on SBA lending, and they had their own bank marketplace, commercial banks that they work with. And so it made sense. This was a strategic move that they implemented earlier this year in 2025, where they purchased a bank and the ability to do direct lending throughout the nation. Smart Biz is now Smart Biz Bank. And this is a strategic move because they already had distribution. They already had the clientele. And so they purchased a bank. Now they really became the plug. So this is a lot different than what some of you might be used to them being more of a marketplace. Smart Biz is now Smart Biz Bank, and this is an absolute game changer. We're going to go over some of the products that they're offering right now. And if anyone is interested, I've already dropped some links in the description of the video if you're looking for funding, whether that's bank term loans, line of credit, or even SBA loans. So Smart Biz recently announced the closing of its acquisition of United Community Bankshares, Inc. and its wholly owned subsidiary Centrust Bank. The combined company, renamed Smart Biz Bank, will operate under the bank holding company Smart Biz Bankshares. Smart Biz will now operate as a national lender bank, while Centrust Bank will operate as a division of Smart Biz Bank. Smart Biz Bank offers 4 core products. This is a new product, the Smart Biz Sub 150 Simple Efficient Loan from 50,000 to 150,000. This is bank statement underwriting. So one of the differences between bank state underwriting versus traditional underwriting is looking at the overall debt service coverage ratio. So it includes things like the business's debt to income, the beneficial owner's debt to income, and you have this global debt service coverage ratio. Now, with this new product, they're not looking at the overall debt. The way they calculate the max loan amount is going to be 40% of the gross revenue. These loans are not subject to traditional cash flow based underwriting. Smart Biz is really known for their SBA 7A lending. And so there's basically 2 categories. You have the Streamlined SBA and you have the traditional SBA. So again, the Streamlined SBA, 50,000 to 150,000. You have a 10-year term, so this is 120 months. Monthly repayment, no prepayment penalty. You're looking at about prime plus 5.75. Right now, the prime rate is 7.5, so you're looking at about 13.25% as far as SBA 7A term loan through Smart Biz Bank. In terms of eligibility, you're going to need at least a 680 FICO Experian, 180 plus liquid score, minimum 3 years time in business, US based businesses only. The max loan to revenue is 40%. Now they also have traditional SBA 7A. So just so you're not confused, there's the traditional, which goes up to much larger loan amounts. And then they have the Streamline. All right. So the Streamline actually does have a slightly higher FICO score requirement, and underwriting requirement is a little bit more lenient. It's less going to be on traditional debt service coverage ratio. It's going to be more on the banking activity, bank statements, whereas the 7A is going to be a little bit more intensive. The minimum credit score is actually somewhat lower at a 650, as well as a 155 liquid score. Same revenue requirement. This obviously goes up to higher amounts from a minimum of $100,000 up to $500,000. And you are going to get a better overall rate with the traditional SBA 7A. This is going to be prime plus 2.75. Again, if you're looking at the traditional SBA right now, probably about 10.25%, which is pretty decent. The minimum time in business is only going to be 2 years, and they have a global debt service coverage ratio of 1x. Now, some of the advantages of the new process with Smart Biz Bank is that they now have internal closing and documentation. When they're just sending you to different lenders in their marketplace, you are at the mercy of those lenders. Now that they're an actual bank, they're doing all of that documentation and due diligence in-house, so you're going to get much faster approvals. They also have an expanded credit box. So some of the benefits of their lender marketplace plus Smart Biz Bank. So before they were just a lender marketplace. Now it's a lender marketplace plus they're writing loans on balance sheet. You also now get higher confidence offers and less late stage declines. SmartBiz Bank products have moved their searches to the beginning of the process, including criminal record checks, government loan defaults, UCC, and they also are doing E-Tran at the beginning. Like I said, with this new product, you have the streamlined sub 150. So that's loans less than 150,000. No traditional cash flow analysis, DSCR. Loan to revenue of 40% of top line revenue, not your net profit. So whatever your top line revenue is, so your gross sales, that's going to be used as the basis to determine the max loan amount. So whatever your top line revenue is times 40%. Now, for those who might be wondering, what's the minimum revenue that a business needs to get the maximum $150,000 for that sub 150 product? All you got to do is 150,000 multiplied by 2.5, and that's going to give you the minimum revenue in order to maximize, and that's going to be 375,000, because when you take 40% of this, that's $150,000. So if you make 375,000 top line revenue or higher, you can get $150,000 with no DSRs. Now let's go over the business line of credit. Before we get into this, I just want to explain why business lines of credit are the best type of financial product. Now, I know 0% interest credit cards are popular and there's nothing wrong with them. But when it comes to which one is better, hands down, a business line of credit. A business line of credit might have an interest rate, right? There's no grace period. However, when you look at different business credit cards, if they do offer a 0%, that's usually just for the first 12 to maybe 15 months. After that, you're going to be looking at much higher APRs. Now, right here, we're looking at the American Express Blue Business Cash Card, which has 0% APR for 12 months on purchases. But after that, your APR is going to range from 17.49% to 27.49%. But what about after that? When you're making business purchases or business expenses, what if you need to carry those expenses longer than 12 months? So then after that grace period is up, you're going to be incurring significantly higher APR. Business lines of credit also generally go up to higher amounts. When you have a business line of credit, you're signing a promissory note. During the term of that business line of credit, your limit, the amount of available capital on that line of credit, is going to be fixed. However, the variable APR will change just in the same way it does with the credit card. But the thing about credit cards is that the lender can reduce your limit at will. And this happens a lot, especially with American Express, especially with Chase. A lot of you guys love the Chase 0% credit cards as well. Well, if they don't like the way you're utilizing that, they could lower your limit. However, with a line of credit, since you're signing a promissory note, those terms are legally binding. So business lines of credit also give you easier cash access. I see a lot of times where people are trying to liquidate credit cards, do all these crazy hacks just to get cash off of the card. In terms of cost of capital, in the long term, business lines of credit are going to save you so much more, because it's going to be prime plus a margin, prime plus 2, prime plus 5, whatever the case is. That's still going to be lower, 17.49%, which is the lowest that Amex is offering on their Blue Cash. And it goes as high as 27.5%. So you're definitely going to be saving more in the long term when it comes to a business line of credit. SmartBiz Bank is doing revolving lines of credit from 50,000 to 150,000. In terms of the qualifications, minimum 3 years time in business, a 680 FICO or higher is required. Minimum annual revenue of 250,000, no outstanding liens, bankruptcies, foreclosures in the past years, no recent charge-offs. As far as the documentation, it's just 6 bank statements and a current business debt schedule. If anyone needs a business debt schedule, I've included a link for a fillable template. All this is listing out your current creditors and your current balances and rates that you're paying on any existing business debt. And the great thing about the business lines of credit is that you can pre-qualify. It only takes 5 minutes, and there's no impact to your credit score. Minimal documentation is needed, just 6 months of bank statements and a debt schedule, no tax returns or complex financial statements required. My credit isn't great. Should I still apply? Absolutely. They know you're more than just your credit score, and their team will work with you to find the right solution. What's more important than actually trying to get approved for funding is actually having a plan on what you're going to do with it. One of the best things that you could do is put that capital into a proven business model. This shows a calculator of your expected payment will be, monthly payment will be for SBA 7A. Now, this is the traditional 7A. So let's say you're borrowing 350,000. Your payment is going to be about $4,722. This is a 10-year term, 10.5%. Again, this will be the payment. So what could you do with this capital for it to make sense? One thing that's really hot right now, and they're talking about this silver tsunami, where a lot of these baby boomers are retiring, existing businesses. I'm not telling you to do this. I'm just giving you an example. This is exactly 350. This is a FedEx route. And this is a website called BizQuest. There's buy, biz, sell, where you can look at businesses for sale. And you can use SBA financing to purchase these cash flowing businesses. So I wanted to give a clean example of 350. So if you borrow 350,000, you could use that to purchase a business for 350,000. Looking at just the financials right here, this $350,000 business is generating $596,000 with a EBITDA. So EBITDA is earnings before interest, taxes, depreciation, amortization. So it's basically your earnings, $184,000. The monthly debt payment would be $4722. And then if we multiply that by 12, your yearly debt service is about $56,000. Let's just round it up, say $57,000. So based off of the EBITDA right here, $184,000, this could support the debt payment. So you bought it for 350, it's earning 185,000 and it's costing you 57,000. So you have about $127,000 left with the debt service. This is an example of a business acquisition that will be able to support the debt service. Again, this is just an example. I'm not telling anyone to go out and do that, but I just wanted to share this funding resource with you. Smart Biz Bank. Not only do they offer SBA 7A, so SBA Express 50 to 150, so the sub 150. Then you have the traditional SBA, which goes to much higher limits. And you also have bank term loans and a business line of credit minimum of 50 up to $100,000. No tax returns required for the business line of credit. But let's talk about the sub 150. I think that product is probably one of the more appealing products because they're not looking at the traditional debt service coverage ratio requirements. So for those who don't know what debt service coverage ratio, DSCR, let's say the debt service is $1,000 a month, but the business is generating $1,200 a month. That means there's enough money left over after all expenses to cover the debt payments and usually leave a little bit of a cushion, right? With the sub 150 product, it's not even looking at the debt service. It's only looking at the top line revenue and taking a max loan amount of 40% of that. That in itself is a game changer. I know there's a lot of businesses, for example, who might have a high gross revenue, but because of deductions, because of depreciation, their net income might be very low. And with traditional banks, they won't qualify because they're not profitable on paper. Now, for what it seems with this sub 150, that's not even what they're looking at. They're only looking at the top line. The max loan about is 40%. So if you're generating $350,000 in top line revenue for your business, you can qualify for the max amount of $150,000. That's an absolute game changer on a 10-year term. Click the link in the description of the video to get started today. Get that money.